prevailing stability in the foreign exchange market would continue to moderate pressures on the domestic. The MPC noted the improvements in the financial stability indicators, including non-performing loans, capital adequacy, and liquidity ratios of the deposit money banks. It urged the bank to sustain its surveillance over the banking system by taking prompt corrective measures to further improve stability in the system. The committee also called on the fiscal authorities to build significant buffers to strengthen the efficacy of monetary policy. Overall, the Monetary Policy Committee considered the options of either to loosen, hold, or to tighten. The committee continues to hold the view that although loosening would encourage the flow of credit to the real sector, help in reduction of the aggregate cost of credit, and spur business spending and investment, thereby reinforcing the CBN support for output growth and economic recovery, it, however, believes that doing so would reverse more rapidly the gains of price and exchange rate stability achieved so far, given the liquidity impact. The ensuing liquidity will exert pressure on the exchange rate in the light of increased capital flow reversals arising from monetary policy normalization by the U.S. Fed. This will further depress the capital market. As for tightening, the MPC holds the view that while tightening will strengthen the stability of the foreign exchange market because of its dampening effect on the demand for foreign exchange, it was, however, convinced that this would simultaneously dampen investment growth, widen the output gap, depress aggregate demand, and weaken output growth. The MPC recognizes the fact that it had held the policy rate and other policy parameters constant over the last several meetings. Committee underscores that by holding its policy positions constant over this period, it has confidence in the various policies and administrative measures deployed by the bank, which have resulted in the moderation in domestic price levels and stability in the foreign exchange rate. Thus, a hold position is an expression of confidence in the policy regime, given the gradual improvement in both output growth and price stability. On this premise, the downward risks to growth and upside risks to inflation appears contained. Committee's decision. In the light of the above, the MPC decided by a vote of all 11 members present to hold. In summary, the MPC voted 1, to retain MPR at 14%, 2, retain the asymmetric corridor at plus 200 and minus 500 basis points around the MPR, 3, retain the CRR at 22.5%, and 4, retain liquidity ratio at 30%. I thank you for listening.
Thank you, Governor. Distinguished ladies and gentlemen, it is now for questions and answers. And you know we have a policy of answering all questions. And so this specific gathering is for issues mentioned in the communique. You can take us up on other issues where we leave here. So please come up. Just one question per person, please. Give us your name and your organization. Please come to this side. That means it's only one question we're going to get. Please, let's remain gentlemen and ladies that we are respecting the House rules.
Thank you, the Governor and the Executive of CBN and MPC. My name is Emeka and the right of Banga newspaper. Going through your speech, sir, what is dominant there, or one of the dominant things there, is that the external threat, by this time, the normalization of policy rates in the United States and similar developments in UK and also in European soil is very much around us, and the threat to the emerging market economies and frontier economies like Nigeria. My question is this, I am yet to see over the period since the normalization started a major policy shift in response to that. Probably you will educate us more on the reaction the MPC and CBN have put in place since then. And probably you also do let us know that going forward, these are the lessons you've learned on the impact of such major policy shifts in the developed world on developing countries. Thank you.
Thank you. I think that's all. Okay.
Mr. Governor, my name is Udo from Premium Times. The whole of last week, Nigeria is so worried about the comment by two envoys from the US and the UK over the MTN transaction. And at a time that seemed to have created some upset in the economy, and which affects maybe prospective investment in the economy. So would you react as to why the CBN kept so late, close to about 9 years before the intervention at the time that they did over that transaction?
Mine is on Brexit, and it's really an issue at the moment. And the concern really is how May and her team are going to strike a deal. However, whatever happens, do you share any fears on the possible outcomes of that deal, whether it happens or not? And quickly, in addition to what my colleague asked, on US normalization policy, do you have any lessons that you would like to share with us from that? Thank you.
Thank you very much. Mr. Governor, my name is Mark Simon from Leadership Newspapers. At the last FPC briefing, the FPC did raise concern that there are indications that Nigeria will slip, the Nigerian economy will slip into recession if some things are not done. I just want to ask if those indications are still there, those indicators are still there, and if they are still there, what would you say should be done again?
Thank you. I think that's okay. The very last one.
Good afternoon. My name is Ralia Tagbemeko from Classic Heaven. My question is about the upcoming elections. Are there any stringent measures in place being put by the Apex Bank to curb excessive borrowings by banks to fund political ambitions? Thank you.
Okay. Mr. Governor.
Thank you very much. The first question talked about the external threats, issues burning around the US Fed normalization, and that we're yet to see major policy shift in this regard, and what are our plans, as well as lessons learned from this. Well, I think the normalization, like some of us may know, is a policy arising from the process of raising rates so as to attract investments back to the United States. Those flows that left the United States during the period of quantitative easing are now returning back. And what that means is that the impact has been, I would say, very adverse, particularly on the emerging and frontier markets, where these funds flowed at the beginning of the period of quantitative easing. And the truth is that on most of the emerging market economies, we have seen these countries lose not just also reserves, but they have suffered what I can call a substantial depreciation in their exchange rate. For Nigeria, the impact, in our view, and the Monetary Policy Committee actually did review that the impact on Nigeria has been somewhat moderated, given that we have been able to achieve a stable exchange rate over this period, and also we have also not lost reserves. If we have lost, I would say just very marginal amount that we have lost. What actions did we take specifically? The Central Bank of Nigeria took a number of foreign exchange management intervening actions, but most potent of which is the investors and exporters window, which we introduced in April 2017. What we did with that market is to open the market to say, look, we want to be very transparent, and that people should be free to import and export currencies and deal legally and legitimately in their foreign exchange transactions in Nigeria. That, to a very large extent, has helped in building the confidence in the Nigerian foreign exchange market. In that process, we saw a lot of flows, substantial flows, into the Nigerian market, to the extent that at a point, we started to buy dollars into our reserves, and also complemented by the fact that we had positive upside in the area in crude prices. We saw reserves growing to about 47.5 billion dollars. This has helped us, because what that meant is that when it was tough, we learned a lesson that, look, it is nice to save for a rainy day. And now that there is some external shock confronting all emerging and frontier markets, I would say we have been able to substantially withstand this shock, and hence we've seen the stability in our exchange rate, as well as suffered very minimal loss in our reserves. Unlike the previous time period between 2015 and 2016, when the shock was very massive and adversely impacted on Nigerian economy and the foreign exchange market, during that time, we saw zero inflow of flows. Till today, notwithstanding the fact that US Fed normalization program is going on, we still see reasonable flows into the country, rather than a completely dryness in the flows into the country. This has helped, and it's all as a result of the confidence that the foreign investor community has had on our policies, and the fact that they can read between the lines, they can see us, look us in the eyes, and they can say, look, there is no surprise element in everything that we've done, everything that we've been doing. We have been extremely transparent in the process, in the foreign exchange management process, in the way the market has been operated. Like those days, no one will ever say that you saw the central bank intervening in price determination or any sort of these practices, and it has helped to boost the confidence. That is as it affects exchange rate. In the area of output demand, the central bank took also some very good actions in the area of reining in inflation. The Monetary Policy Committee adopted a policy of tightening, and like you may have heard in the process of reading the communique, we've tried as much as we to use both OMO as well as administrative measures to keep the market tight, and ensure that the size of liquidity we have in the market is what we think is optimal to run the economy in a way that we've been able to rein in inflation from 18.72% in January of 2017 to 11.2% that it is today. We've taken a couple of other unconventional monetary policy approaches through our interventions in agriculture, in the manufacturing sector, to at low interest rates, at a time when some of our deposit money banks were not showing interest because most of their interest were diverted more into the risk-free assets, we decided to intervene in what we consider to be priority sectors of the economy, agriculture, manufacturing, SMEs, and indeed, we would eventually still unfold more measures to improve access to credit, particularly for the small and medium enterprises. And with this will be unfolded in due course to ensure that when we say that we have intervention for small, micro and small enterprises, what we hear sometimes is that, oh, is this program available? We are not able to access it. We've seen and observed situations where people who are in rural communities are unable to access credit, and we are determined to ensure that they have, it's not everybody that must knock at the door of a branch manager to be able to access credit. You should be able to do so with minimal stress, and in fact, we will continue to deploy some of the programs that we have put in place under the Anchors Borrowers Program to achieve access to credit to our smallholder farmers, particularly in our rural communities, because we feel that these are the areas that truly require this support, and with they being happy with access to credit, we know that the wealth in rural communities will be enhanced, will be improved, and from there we can see to the growth of our economy. Premium Times talked about Nigeria worried about the MTN issues and the rest of them, where that it took 9 years. Well, you must know that issues like these, there are several issues involved in this matter. Issues of whether capital reportation CCIs were issued in 24 hours and several others. So these issues were dealt with over the period. But of course, the one that appears to have generated the kind of attention that we didn't think it should generate is the issue of repatriation. But let me say this, that it is better for you to be slow in taking some of these decisions, but when you take them, you know that they are potent and that there is rationale for those decisions. I repeat, there's rationale for the decision we took because we expected certain documents to be submitted. Those documents have now been submitted. We are in a process where we're saying these matters will be resolved. We have held the meetings with the MTN group. They flew in from South Africa, and we have held meetings, and we are at the verge. And what I mean verge is as good as announcing it, but please spare me the stress of not talking about that, about what the agreements are at this time. At the appropriate time, these will be announced. But I'm very optimistic that we have reached the end of the road on this subject, and I repeat, and I will continue to say so, that the sanctity of the CCIs that are being issued by our banks to foreign investors remains sacrosanct, and no other company is being investigated on the issue of CCI. No other person is being investigated on the issue of CCI. This is an isolated matter, but I must also say that there have been foreign investors in Nigeria, Unilever, Nigerian Breweries, Guinness, all of them have been foreign investors who have been carrying CCIs for over 50 years. And they have conducted their businesses in a way that we are very happy, and that's why there has been no issues. It doesn't mean there is issue on MTN. Yes, there are some issues, but the point is, it is being resolved, and there is no need for anybody to worry. I repeat what I said the last meeting. These issues will be resolved equitably and amicably to the benefit of all. Brexit. Yeah. It's a decision about the economy of Britain, and whatever the impact will be, I think we also have a responsibility to see to it that we put in place policies that will shield and protect our country, our economy. Our ultimate at this time, the challenge remains reducing inflation, building reserves, keeping exchange rate stable, and growing the economy to improve output, both agricultural and manufacturing output, for the benefit of our people, making sure that our poor people are able to access credit at single-digit interest rate, because those are the directions through which we can achieve truly the growth that we so badly desire. Thank you.
Thank you so very much, Mr. Governor. All the questions have been exhausted.
He's asking me about election spending. Let me take on election spending. I think I might as well say this. We have had meetings with the banks, and we have told them to be very careful and wary. Money laundering issues may arise, and having advised them to be very careful on money laundering issues, I believe they will be careful themselves, because they've been told that if they are caught on issues like this, that they will be heavily penalized. On lending, of course, when you say banks lending to politicians, banks have their risk acceptance criteria and all that. I don't think that the banks will do that at this time. Everybody must have learned their lesson, and I think the right thing is just for everybody to go about, conduct their business. But we as Central Bank are waiting behind and watching that when things go wrong or about to go wrong, we will deal with it as appropriately as possible. Thank you.
Thank you, sir. I think that is very satisfactory. People will be very happy. Reverend Summit to say thank you, everyone. Thank you, members of the MPC. Thank you, directors of CBN. Thank you, the people for which we are here, my colleagues, the journalists. Let's carry on. Happy Christmas, everyone. After the elections,
all speculations laid to rest now, as all the 11 members in attendance at this last Monetary Policy Committee meeting of the Central Bank of Nigeria voted to hold the monetary rates, and that is the MPR monetary policy rate at 14%, the asymmetric corridor at plus 200 minus 500 basis points around the MPR, the cash reserve ratio at 22.5%, and liquidity ratio at 30%. And from all the crew members of the NTA Outside Broadcast Service, I am Vivian Idekbefo, thanking you for joining us. Enjoy the rest of our programs.